Uber recently went public and the stock is already getting destroyed. Now, in the short term, I think that the stock will probably be very volatile because it is just a brand new IPO. And also, Uber operates in an industry that I think we don't fully understand or don't know how to fully value just quite yet. And on top of all of that, you have the whole trade war between the US and China. And so many stocks across the board are getting absolutely hammered. But in today's video, I want to take a long-term approach at Uber and try to figure out if there's really any reason at all to even be considering this stock as a long-term investment. So I want to look at the company, I want to look at their business, their future potential, I want to look at the market, the industry that they operate in, who their competitors are, how does Uber stack up against them. I want to look at their stock and their valuation, all of that and a lot more in today's video. I think it should be a fun one, so make sure you hit the like button if you enjoy this and you want to see more individual stock review videos in the future, and let's get started. What's up everybody, my name is Ale and welcome to my world of stocks. Alright, let's go ahead and start by taking a look at the company and their business, and then we'll transition to their future potential and we'll also look at their stock. Now I'm sure that you've all heard of Uber by now, but they're mostly just a sort of on-demand ride-sharing service provider, and they're pretty much taking over what taxis used to be and expanding on it even further. But so far they have over 91 million monthly active users on their platform, 3.9 million drivers, 10 billion trips completed across 63 countries and over 700 cities, with 14 million of those trips being completed every single day. And by the way, those numbers were even bigger or even higher in their last quarter, with about 93 million monthly users and 17 million daily trips. So pretty impressive numbers for a global company overall. And again, when people think of Uber, they mostly think of their on-demand ride services, but Uber has been very successful in diversifying their business over the years, despite only recently launching the company back in 2009 and barely going public less than a week ago. But so far, they've already launched Uber Eats in 2015, self-driving pilots in 2016, and Uber Freight in 2017. Uber Eats is pretty interesting because it allows you to order food through your phone and have it delivered without having to even leave your house. And as lazy as I think that is, I have to admit that my girlfriend and I have used similar services like DoorDash and Postmates on occasion. And it is pretty nice to just kind of stay at home sometimes and order some food if you're too tired from work, too tired to cook or go out. So I could definitely see this having a lot of very high future potential. Especially when you consider that it wasn't too long ago that US retail spending on eating and drinking establishments actually surpassed grocery spending for the first time on record, indicating that more and more people are opting for just purchasing already made or already prepared food rather than buying groceries and cooking everything themselves, which is probably also relatable to our obesity rates here in the US, but that's a rant for another day. In any case, those trends are translating to very impressive sales for Uber Eats, who grew their sales by almost 150% last year to $1.46 billion, accounting for about 13% of Uber's total revenue. So this isn't just some little side business that they're doing, it's actually pretty significant. But to be fair, that rate of growth slowed down dramatically to just 84% in the first quarter of this year, likely due to increased competition in the market. In fact, here's a chart from Edison Trends showing that Uber Eats market share in the US when looking at consumer spending has plateaued a bit, while the previous leader in Grubhub has seen dramatic declines as well, both of which are likely a result of the surge in market share growth we've seen from DoorDash, who has often offered better deals and competitive pricing. To be fair, Uber Eats still commands a larger number of ticket orders, but that is likely due to the partnership with McDonald's, as they expect to offer delivery services for 10,000 locations in total once they get everything fully up and running, but they're already delivering for many locations. But it still shows that it's a competitive market nonetheless, and one that even Amazon has been trying to compete in through Amazon restaurants. And I don't know about you guys, but I would never want to tangle with Amazon in virtually any market. Still, only about a quarter of their traffic is from the US, so Uber Eats still commands a very large, a very dominant presence globally, although I could not find any specific market share figures, unfortunately. But when looking at Uber Freight, That's another pretty interesting part of their business because it incorporates many of the technologies from the Uber platform into the logistics market to connect shippers with carriers. So far, the business is pretty small and only in the US, but there are plans to expand internationally, and growth has at least been on their side. They didn't provide exact sales figures for last year, but the business falls under their other bet segment, which generated $373 million last year. And while that's only around 3% of their total revenue, it's actually climbed by around 450% year over year from just $67 million in 2017. And when looking at autonomous driving, Uber just spent another $500 million on research and development for their advanced technologies business that is focused on bringing autonomous vehicles into the Uber network, which is probably how they're going to become profitable in the future, as it could dramatically lower the amount that they have to pay to drivers and also, meanwhile improving their margins. They're even working on autonomous and electric on-demand aircraft that would carry passengers to certain destinations without having to sit through congested traffic, but instead fly over it. By the way, I haven't seen any reports even mention this. Whenever I'm reading reports about Uber stock and people are talking about whether you should invest in it, nobody ever brings this up. And I just think it's crazy because this is a pretty cool thing. It's probably the most interesting part of their business, in my opinion, at least to me. But to be fair, we are still a ways away from that future, but Uber's plans are actually much closer than I thought they'd be, as they're already planning to launch in select markets by 2023, although pilots will be used at the beginning, but I could honestly see this turning into a huge business in the next couple of decades, and again, this is really one of the most exciting things that I think Uber is working on. But back to autonomous driving, they've already landed several partnerships with big automakers, including a recent one with Toyota, who will supply Uber with Sienna minivans, and Uber will equip them with their self-driving systems. And Toyota, together with Denso and SoftBank, have also invested an additional $1 billion into the Advanced Technologies Group. By the way, it's still difficult to say how big these markets will be, but most analysts agree that there is a ton of future potential for autonomous driving and on-demand ride services. In fact, ARK Invest estimates that net revenues for autonomous platform providers will exceed $2 trillion by 2030, with other research reports estimating compound annual growth rates for the global autonomous vehicle market at north of 20% for about the next decade, mostly due to revolutionary new trends like the transition from vehicle ownership to mobility as a service, which would drive further demand for autonomous vehicles. In any case, when looking at the ride-sharing market in general, there are many estimates out there with different figures based on what they include in their calculations, but most of the ones that I've seen, like this one from Markets and Markets, put the global ride-sharing market somewhere north of $200 billion by 2025, with a compound annual growth rate of about 20%. Needless to say, it's a pretty big market opportunity that should continue to increase in the future, just like the other several markets that Uber is currently trying to tackle. And when looking at market share in the US, Uber has maintained a dominant lead over their pretty much only real rival in Lyft for quite some time. That lead, however, has been dramatically shrinking from about 80% share in Q1 of 2017 to just 64% market share a couple years later. Meanwhile, Lyft has grown from 21% to as much as 36%, according to Cruise Consulting. Now, this is where the video could get very biased as we argue which company is better to invest in, but in my biased, subjective, and anecdotal opinion, from my own personal experience, I feel that Lyft usually offers lower prices where I live. And so because of that, I've mostly seen everyone around me using Lyft rather than Uber, and that's probably helped them gain some market share, even though Uber has much more notoriety and probably a stronger brand. But that brand, however, has taken some pretty big hits in the past, as they've consistently dealt with strikes, numerous lawsuits, and allegations of breaking local regulations and fostering an environment of sexual harassment. In fact, it has tarnished their reputation so badly that their former CEO wasn't even allowed to attend the bell-ringing ceremony for their public IPO in a gesture of showing the investing community that Uber is moving forward under new leadership with new principles. Still, while Lyft is only available in the US and Canada, Uber is already dominating many different parts of the world, as they claim to have over 65% market share in North America, Latin America, Europe, and New Zealand, with over 50% share in India, the Middle East, and North Africa. And even though they had to leave big markets like China, Russia, and Southeast Asia, they were still able to acquire big portions of the domestic leading ride-sharing companies in those regions at 15%, 38%, and 23% respectively. So if I was literally forced to invest in one of these two companies based on my very limited knowledge, I think I would probably go with Uber because they're a little more diversified. But again, we'll talk about this a little more later in my conclusion. In any case, the strong market leadership has ultimately led to some pretty strong revenue growth for the company, as they jumped from $3.8 billion in sales in 2016 to over $11 billion last year. That's growth of over 100% in 2017, but a much smaller rate of just 43% in 2018. Still, 43% is impressive growth regardless, especially with the rise in competition. But unfortunately, with revenue growth also came bigger losses. Now, I don't generally consider this as big of a deal as others, because I firmly believe that companies need to spend a lot of money if they want to even dream about disrupting an industry. But the facts are the facts, and back in 2016, they reported an operating loss of $3 billion, which grew to $4.1 billion in 2017 before coming back down to $3 billion last year. This puts their operating losses at a total of over $10 billion in just the past 3 years, which I admit is very difficult to ignore. Keep in mind that this is a company that IPO'd at an initial valuation of around $75 billion. So for that valuation, you would generally expect some better margins. However, you have to remember that they were originally planning to IPO at $120 billion, but after Lyft went through such horrible performance of dropping by around 45% since their IPO, Uber decided to keep dropping their valuations. I believe one time it was like 120, then they dropped it to 100, then they dropped it to like 80, so they just kept dropping it. And even since then, it's still down around 12% from the opening price of around $42 a share, and down around 18% from the highs that they reached of $45 at their IPO. So needless to say, this stock is way cheaper now. Their market cap now is just around $62 billion. And that's about half of what they wanted, which was originally like 120 billion. Anyway, thanks to the drop in price, they're now trading at just about 5.5 times their sales, which is pretty much the same as Lyft. Yet Uber is a much more diversified company across the globe. So again, I think you're definitely still paying a premium for the stock, but at 5 times sales for a company that is growing their revenue by 40+% in markets that are likely to get bigger in the future, and they also command market share leadership in pretty much all of those markets, I think the price isn't all that crazy. Still, I just can't bring myself to pull the trigger on Uber stock, and it's not because I don't believe in the company. I actually think that they have a ton of future potential, and I also feel that they're a very kind of pure play, kind of direct play on some of these great markets, like the food delivery services market, the ride sharing market, the autonomous kind of robo-taxi market. I think it's a great kind of pure play on all of those markets. The only problem I have is that I feel that I can get at least some exposure to those markets with much safer stocks that I like a lot more. And so that's kind of the problem. Because when you look at the robo-taxi kind of ride-sharing market, I could just invest in Google, who owns Waymo, which Waymo is like an autonomous vehicle company, and they're even partnered with Lyft. So they're already offering kind of robo-taxi services, I believe, out in Phoenix. So I could just invest in Google and still have some exposure. Now, I'll be the first to admit that may not be as much exposure as something like Uber, but I don't really need like full exposure to it. With Google, it's a much more diversified company. It's a profitable company. It's a profit generating machine, has a huge balance sheet, is still growing at very high rates. It could afford to pay out dividends if it ever wanted to, or just keep reinvesting in future growth. So, and Google is a very, very safe stock as well, that I think could be a core position to really anybody's portfolio. So for me personally, I don't own Google yet, but I probably will be buying Google stock soon. And so for that reason, I feel like I kind of get some exposure there. Now, another stock that could kind of compete with that is Tesla. And I think Tesla is going to have a very bright future in the whole kind of robo-taxi market. So that's kind of another indirect play. And I am already invested in Tesla. And Tesla is a spec stock, I fully admit that, but so is Uber. And so if I'm going to be spending some of my spec money, which by the way, about 10% of my portfolio goes to spec stocks, I'd rather my spec money go to Tesla because I don't really have that much to play around with. And I already own Tesla, NIO, and 2U, which are all spec stocks. So I'd rather my money go to Tesla, who I think is doing other things and is well ahead of any competition in autonomous driving as well. And I feel, in my opinion, I feel Tesla is, a lot less speculative than something like Uber. And then finally, even if you look at the food delivery services market, I think you could still get exposure to that market through something like Amazon, which Amazon, again, is another really great company who is now becoming a profit generating machine, but is still a revenue generating machine as well, still growing at very high rates. And it is a very dominant company. Now, in the food delivery services market, I'll admit Amazon is not really being very competitive yet, but they could at any moment. And I'd be very scared to be in a market that has to ultimately compete with Amazon whenever they decide to really take it seriously. So for those reasons, I feel that I can get indirect plays or indirect exposure to some of these different markets without necessarily having to invest in what I consider to be a very risky speculative stock. However, with a very risky speculative stock, you also have the potential for very high capital appreciation. In other words, the stock could take off in the short term, medium term, could double, triple, quadruple. Who knows when we get a trade deal done with China, maybe a bunch of hype, enters the market again. And maybe Uber is one of the stocks that people flood into because at the moment, Uber is still dominating these markets. Google and Amazon and Tesla aren't really competing there yet. So at the moment, if you want a direct kind of exposure to it, you'd probably have to go through something like Uber. So I could see a lot of hype entering it. And because it's already a half the value of what they want it to be, a lot of people might flood into the stock thinking it's kind of a little bit of a value, even though that's kind of absurd. But a lot of people might think that it's a value play, sort of. I don't want to get into all that because it's not, but just kind of based on hype and momentum. And that could lead to the stock kind of doubling or tripling or whatever. So I am hoping for that because I know a lot of you like Uber stock based off the comments that you guys have been leaving me. So I'm definitely hoping for that for you guys. I definitely want Uber to do very well. But for me personally, it's just not worth the risk. And again, that isn't to say that I don't think Uber will do well in the future. I just think that the risk reward isn't really worth it when I can invest in Google, Amazon, and Tesla and still get some decent exposure to some of those markets and many other markets as well that are all very high growth markets also. So anyway, that's just kind of how I feel about it. I hope that makes sense. I hope I didn't ramble on too much and make it all confusing, but thank you so much for watching. I hope you enjoyed the video. Please leave your comments and thoughts down below. I think we could have some very interesting discussions about Uber stock down in the comments section, especially if you're a bull. Also, if you're a bear, we could definitely have some good conversations there. But hit the like button if you enjoyed the video. Thank you so much for watching. I'll catch you guys in the next one. Take care. Bye-bye.